And joining us now to take a look at the market trade as we start another week, we welcome in John Heinberg with Total Farm Marketing. John, great to have you back. You had a good weekend.
Yeah, it was nice weekend here. Picked up some good rain again though through during the weekend as well, but so things continue to look good here and nice and green for typically untypical, I would say, or untypical for August at this time of year.
Definitely. Well, John, let's jump right in and talk about today's action. Corn market for starters, looking fairly strong. Talk to me a little bit about what you saw in the corn market today.
Yeah, good solid day today. Probably led a little bit more by that strength in the wheat market, which we'll talk about here in just a bit too. But obviously the Pro Farmer Tour came out with their results well below USDA's last numbers, so the market's anticipating those corn yields coming down. Again, it will be part of the process that the USDA has to go through. When that report comes out in September, we likely won't see that big of a cut, but it'll start maybe working that way. So we built some good premium into the market here while that crop tour was going on and just the speculation that things are going to get tighter. So again, it's good to see that type of strength today, now pushing up through the 100-day moving average, which is an area we haven't traded above since June. So we'll have to see what things look like as the technical picture looks fairly strong. And again, a good move in the wheat market today. So that's really helping out that corn market overall, despite the weakness in the beans.
Well, you mentioned that wheat market looked like, yeah, really good strength there. Looked like maybe the algos kind of piled on there a little bit and added to some of that support in the wheat market today, John.
Yeah, we got a couple different things possibly too that's coming into play outside of that side part of it, the equation. First off, we look at first off the technical side of it. We did break through some key moving averages here this today. Guy brought some short covering in. The funds are sitting fairly short on that market, at least compared to all the way back to February in their positioning. So there was some room for some money flow, especially with that strength in the core market, maybe triggering that. That market's been so depressed, that wheat market, that we were ready for some type of a pop. We've been putting a little bit of a round bottom in, and we fell apart here a week or so ago, and then we snapped right back off of that. So that was encouraging to see that maybe we got some money flow in. Throw in there also to the Ukraine situation. There's obviously still a lot of concerns regarding that nuclear plant in the Ukraine. I read today or saw today that some UN investigators are going to go in and inspect that and make sure things are working properly. Plus, just ongoing tensions around that area, but keep some caution in the market. And then lastly, just some whispers that maybe there was going to be an Iraqi tender again for some U.S. wheat. So that, again, just kind of maybe showing that this market's ready to make a little bit of a move here and is undervalued. Despite the fact that the U.S. dollar did break out to a 20-year high today too, before kind of reversing over. But that wheat market's been due for a little bit of boost here, and then we got it today. And again, I think that was part of what really gave corn probably that second leg higher today.
John, you think about the move in wheat, and you mentioned how it maybe needed to happen. What are your thoughts? Do you think wheat maybe is looking to resume its leadership position here in the grain trade moving into September, or are we kind of in a wait and see approach here as we have that September USDA report coming up in a couple of weeks?
I still think we're going to be in wait and see mode. I just think we've been so undervalued that the wheat market has room to move higher to get maybe a little more fairly valued. You go out there and look at some of the production that's out there. Obviously, European production is still a bit of a question mark because of the hot, dry conditions there. Again, nobody knows what's going on in terms of China, but they have ample supplies of wheat. Just a matter if they continue to be a buyer on the world market. But Russia came out last week, very large crop there. Australia talking about a large crop there. So we're building some bushels out there globally. But this market's so far off the highs and so depressed that it just feels like we got a little chance to move this up. I was targeting maybe a push and back up into that 200-day moving average. On those wheat boards, another about 40 cents higher would be a fair, I think, move here given the amount of sell-off. That'll take a few other things. I think we need the other grains to stay fairly strong. And, unfortunately, beans are kind of fighting the current today. But again, I think that's just going to be a piece of the puzzle here. It's just going to be some strength in the commodity sector. And we've seen that over the last couple of weeks. And, maybe we're getting some money flow back into the commodity space. And wheat's one of the ones that's the most depressed.
I'm going to circle back to corn a little bit here, John. Some of that money flow in, we kind of saw that start the beginning of last week with the crop tour going on, and I think we saw some of that on Friday as well. And corn, I think December corn now 21 of 27 sessions moving higher. It's something close to that. So you look at December corn and you look at corn in general. I mean, if that yield, say, is realized at 168, I would have to think some price rationing is going to really have to come into this corn market here pretty quickly.
I would say so too. Again, when you start talking those types of numbers, that's going to significantly impact carryover without demand adjustments. So that could be something that we'll have to watch going forward. Again, the charts are pointing higher, at least with the move today. So we got some more room for this to possibly keep climbing. So we'll have to see how it plays out. Now, again, we're going to be fighting the seasonal tendencies here. Obviously, we're going to be starting to see the harvest starting to kick up a little bit. Realistically, I think the cash market's going to be where that corn market's going to get rationed at. So we'll have to watch what's happening there between the haves and the have-nots. And we're starting to see that already from talking to producers. If you're in an area, we got good production, those fall basis numbers aren't there, or not nearly as strong as those areas that are going to be weak. So that's going to be a big part of this all going forward. It's just that combination of what the cash market is, where we are with the outside markets and the money flow, as well as just that seasonal window. Again, like I said, I like the upside here, still cautious that we still got some room to come back down again, but this market definitely feels very well supported given that potentially tighter supply picture.
John, soybeans again kind of got the short end of the corn bean spread today. Some pressure there. I'd have to think the rain over the weekend probably was part of that. And then I know some talk of some lessening Chinese demand is out there again in the market as well. But you take a look at soybeans, you look at last week's crop tour. What are your thoughts in this bean market now as we look to move to September?
As we get closer to the next set of numbers here, the September report, the Pro Farmer Tour came out, not say validated, but at least kind of put things in the ballpark where the USDA moved to at on the August numbers. Again, throw in some fairly decent weather over the last handful of days. Fairly good batch of rain moving through Iowa and Illinois again today, as well as rain through Minnesota and Wisconsin over the weekend. It's just going to help support those later beans. And that's something that keeps some pressure on the market. The pro farmer numbers, as friendly as they were for corn, were not friendly for beans, at least in terms of any major cuts in yield. So with that, the market seemed to be under pressure most of the day today. Let's just watch what happened with the soybean meal market today as it kind of rolled over again as it tried to challenge those highs. Maybe that's a sign of some demand concerns here in the short term. Looked at export inspections today. They were below expectations with the marketing year ending is, another thing we did not need today. So we put 20 cents of downside in, but realistically, we traded within Friday's range. So I think tomorrow might be the key day. Do we hold the lows from last week or do we break the new lows, which in my term would send some technical selling into the market? So we'll probably see where this wants to go. But, as tough as it was being down 20 today, we traded within those Friday's ranges, which makes it a little bit more of a consolidated type trade today.
John, let's move to livestock hogs. Have we found some floors here? Have we found a little bit of technical support possibly in this market?
I will say cautiously and hopefully in this regard. The biggest thing we saw last week was that big plummet in those retail values at midweek, and that just sent this market reeling. Now we got a $7 jump back in carcass values at midday today, so that probably helped out, obviously, with the price strength. But we didn't see that direct cash market kick in, and the index continues to tumble. So we're questioning right now which way this wants to go. Does the futures market want to go meet the cash market? Is the cash market coming down to meet the futures? At least the current trend seems to be that way, where cash is tightening. So that'll keep a lid on things. But with that, December is now the most actively traded contract. We're up three days in a row there. We got back above the 200-day moving average, which is kind of one of those swing points for me. So that could bring a little bit more recovery. Not saying we're going back to those highs, but we get back to the middle of the range and those mid 80s. It'd be really nice to see on that December futures. So at least maybe we got some stability here, trying to etch out that low. But as long as those retail values, if they come back down again, the way the cash is trending, wouldn't shock me that this market could roll itself back over to go retest those lows.
How about in cattle? Felt like pressure from corn, at least in feeders today. Live cattle held up okay. Any thoughts on the cattle market?
Well, we got August expiration here in a couple days, so that brought that covering of those shorts into that market. That kind of lifted up the whole market in general today. But at the same time, still held in there pretty well, even though we have mild losses and those deferred contracts on the live cattle side. Cash trade last week, 142. October's down to 142.90. So we're kind of pulling in line with the cash market, with October becoming the lead contract here after August expiration. So I think that keeps us well supported. Plus, on top of that, retail value. Still got choice carcasses around 260. That's good. That's good money out there to keep this market supported. As long as that stays in play, that'll help out that live market. Feeders obviously were the flip side of the reaction to the corn market today. Broke a little bit technically last week. Got some more follow through today. Feels like we're still very well supported here, even though the money's moving to the sidelines. But we look at the cash market, talking to producers. Again, the cash market continues to stay firm. I think that'll be still very key for holding on to these feeder cattle positions longer term. But we're in a window here post Labor Day in terms of the demand cycle. We do typically see some rollover, and it feels like we're getting that, at least right now in the cattle market. Now we'll go find ourselves a fall low, and I think then this market's going to get to be undervalued again.
John, appreciate the time as always. Any final thoughts you have for us today?
Again, things are going to stay volatile. Biggest thing I was talking with producers about today, you go look at corn, we're at 680 again. If you're behind on some of those sales, don't forget about that seasonal window that's still in front of us. As optimistic as we are, the prices can go higher. You got great value out there. Don't be afraid to reward the rallies with a few cash sales. You can always shift the risk to paper here. So just kind of stay active. Again, market your crop and your window. Look at what your cash market might be 3-4 months from now when you're in the harvest area. And this might be good value here. So definitely take advantage of it. If you don't want the cash sales, move those puts back up, because seasonally we still trend lower in this area. Even with those friendly numbers, if the USDA starts moving slowly, we can see this market start working back to a fall low. But again, like I said, overall, I still feel like we're pretty well supported here. But boy, we've got some pretty good value here after basically a dollar rally off those 580 lows.
John, always a pleasure. If folks want to reach out to you, get a little advice there at Total Farm Marketing, what's the best way to do that?
Love to chat with them anytime. Feel free to give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And again, don't forget about our website, totalfarmmarketing.com. Again, a lot of great information for our producers. Feel free to take advantage of that information, and feel free to reach out. Love to talk markets with you about anything. Again, I'm always available.
Well, we appreciate the time as always. Again, totalfarmmarketing.com. With that, John Heinberg. Have a great one, sir. We'll talk to you again next week.
Sounds great. Have a good week.